This is Colin Cattell with Palisade Radio. On the line with us today is Jayant Bhandari, a world-traveling investor specializing in the natural resource sector. Jayant advises institutional investors, and prior to doing that, he worked with U.S. global investors as well as Casey Research. When not traveling, Jayant resides in Singapore. He also hosts the yearly Capitalism and Morality Conference in Vancouver. Jayant, thanks for joining us.
Thanks for inviting me, Colin. Good to be here.
We've brought Jayant on today because of his insights on the Asian economies and on the Asian gold market in particular. A lot of investors have been worried about the Indian government's import restrictions on gold. Having been born in India and frequently traveling there, what's your take on the situation, and to what extent do these measures affect gold demand in India?
So, Colin, it's very important to understand that from the Western perspective, a lot of people living in Western countries think that you make a rule and it gets applied. Because in Western countries, sort of 90% of the rules do get implemented. In a country like India, nothing gets implemented. It all converts into corruption. And that is what has happened in India over the last 1 year since they have implemented an import duty regime on gold imports. The result has been that most of the imports have been coming via smuggling. So much so that the price of gold today in India is less than what it should be officially if you add import duty on international price.
Wow, that is pretty incredible. What's the demand level at this point? Is there more people buying, or it just hasn't had any effect?
Well, I'm very keen to understand what demand would be like in a few weeks' time. The trouble today is that there is a wedding season going on, so people have to buy even if they don't want to buy. So investment demand will kick in, will become visible only after the end of the wedding season, which ends on the 7th of July, 2014. So in a week's time, you will know what's actually happening in the investment demand aspect of the gold market in India.
In a recent interview with Cambridge House, you pointed out that the Indian stock market is trading at very high valuations and investors are a bit euphoric. This led you to suggest that investors should be short the Indian stock market. What makes you so sure that a correction is imminent? How big of a correction are you looking for, and how do you play a short position?
Indian stock market currently gives you a profit yield of about 7 or 8%, or even lower today because it went up to its highest ever yesterday. Now, remember that the inflation rate in India is about 9 to 10%. So you are making less money in the stock market by investing in companies in the stock market than you are by investing your money depositing your money in the bank. In the shadow banking system, you get twice or thrice as much interest rate. So why should anyone be investing in the stock market, in my view? The yields are very bad, and in fact, the dividend yields are almost negligible. Indian companies are loaded with debt. So if Indian currency falls again, they will have a huge problem meeting their debts, international debt. So my question is, where is the margin of safety in investing in the Indian stock market? When you don't even have yield, you don't even get dividends out of your investments. Most of the euphoria in India is accompanied by Western institutional investors who think that Modi, the current prime minister, has a magic wand. And as I said initially when I started talking with you, that a lot of Western people think that just through policy implementation you can correct a system. In India, you cannot correct the system. Corruption is all over the country. It is very wide and very deep. It goes all the way into the culture and the society. It's very difficult to get rid of it.
With inflation close to 10% on the rupee, is there anything that is cheap in India right now, or do all roads lead to gold?
A lot of people want to buy gold. A lot of people want to buy properties, and that's where most of the private savings of individuals go to, even today. The problem with India today is that the properties are extremely expensive, and increasingly the growth rate of India is falling. The result is that I think going forward, despite the fact that Indians want to buy gold, they will be under liquidity problems. They will have problems buying gold, particularly if gold price goes up.
Moving over to China, we hear a lot of stories about the Chinese government urging its citizens to buy gold, very different from India. You visited China many times in recent years, and where you live in Singapore is close by. Is the market for gold purchases in China still as hot as people were talking about last year when gold broke down below the 1200 level?
I think there are a lot of myths about China, and from what I have seen in China and in Hong Kong is that when I go to jewelry shops, they're always packed with people. So I don't have the numbers with me, but I see a lot of gold shopping happening in Hong Kong and in Chinese cities. People also talk a lot about over-construction in China. And the reality is that, yes, about 15 to 20% of Chinese apartments constructed every year do not get sold within 2 or 3 years' time. But look at what happens in Vancouver or any of the bigger cities in North America. Go out at 9 o'clock and you will see a lot of empty apartments with no lights, which means that they are empty. So people all over the world invest in properties and not live in those. The same is happening in China, although at a slightly bigger scale. So I think consumption of apartments will continue in China, and I think consumption of gold will continue in China.
Singapore has become a preferred choice for Western investors looking to store their precious metals outside of their own government's reach. A recent guest on our show, Gregor Gregerson, is the owner of Silver Bullion SG and reported a very strong first half for 2014. Are you seeing a similar trend, and why is Singapore the most popular choice in the world right now?
Okay, so Colin, I don't again follow the numbers very closely about how much consumption is happening in Singapore, but clearly Singapore removed sales tax on gold sale in Singapore, and the reason was that they want to make Singapore a hub for trading of gold. Also, there is now a gold refinery operating in Singapore, so they do want to make it a center for gold imports and export. Now, Singapore might not overtake Hong Kong for the simple reason that Hong Kong is so much closer to China. But I think government is providing all possible incentives for companies to trade in gold in Singapore.
Final question, what's your outlook on the price of gold and the price for mining stocks over the next 18 months? I understand you might be a bit bearish before you're bullish.
I am certainly very bearish on the mining stocks. I think we have to remember that mining stocks have fallen a lot, but this has been accompanied by a very big fall in metal prices as well. So in my view, a lot of mining companies, particularly the gold mining companies, are not making a profit. They are very likely making a loss even today. Almost certainly a negative cash flow. And indeed, the market has been a bit euphoric over the last 1 month since the Iraq crisis erupted. But we also have to remember that oil prices have gone up as well, which will almost certainly result in increase in cost pressures on these companies. So I'm not so optimistic about mining companies. I don't think they have changed their culture enough to start producing a positive cash flow. They are still focused on creating ounces. So I think there is a lot of pain for mining companies to go through. I'm much more optimistic about junior mining, the exploration companies that are not producing a cash flow. And the reason is that these guys can go into hibernation if the metal prices don't justify investing in those mines. Mining companies have to keep producing. As far as gold as a commodity is concerned, I have no view on what price gold should be at. And I'm not saying that as a result of lack of understanding about gold market. I spend a lot of time trying to understand hard money and gold. I don't think there's a way you can really predict what gold should be priced at. It's an insurance, and I look at it as an insurance.
Thanks so much for joining us today, Jayant. Listeners who want to get more insight from Jayant can visit JayantBhandari.com. That's JayantBhandari.com. BHANDARI.com. Hope to have you back here soon.
Colin, thanks for the opportunity.